By the way, folks, this is not going to be everything you ever wanted to know about Fibonacci's. This is going to be pretty basic and straightforward tool for the toolbox. You know, how to use them and what good they are, at least what I've found of them. So with that said, I'll go ahead and just kick off here. Basically, Fibonacci levels are good and fit into what Rick and Doug do, and what I've done, what many traders have done for a long time, and that is, I don't understand why, but they, 900 years ago, some smart Italian guy came up with a way to mathematically find support and resistance pretty magically. So I use them in addition to support and resistance levels I draw, and for whatever reason, I've found that they are just uncanny at how well they can help. And at the very least, for example, the free trade that Doug gave the room yesterday on CRM at the end of the day, if I don't have time to drill down on a chart and look for all the support and resistance levels, it only takes me seconds to draw the fib extensions. And I know at least I've got a ballpark estimate. Gets me right in the area where I can expect some resistance above in this case, or if it was support below, if it had been a bear position. But at any rate, with that said, let me just start here. There we go. The first thing you should talk about when you're talking about fibs is what levels you're going to use. I'm not going to get into how they're calculated. It's pretty straightforward, actually, but there is some difference in what percentages people use. For example, the lady that goes by the name the Fib Queen, I think Jim Cramer named her that, she loves 1.272, so 127.2%. I find that to be a derived level, but I guess everybody has their own. What I've found most effective are the ones that are pretty much actually drawn from the calculations, the ratio of the number to the one before it, and that is 23.6%, 38.2%. I throw in for retracements, I throw in 50%, basically because I prefer a retracement or a pullback to not go below 50% of the original rally, so not below that original run up. And then 61.8%. On the upside, for a bullish position, I then use extensions at 23.6%, 38.2%, 61.8%, and 100%. In TC2000, I actually have an extra spot available, so I throw up 161.8 onto that list. So that's what I use, and it's pretty straightforward. Here's a trick, and this is something that you can put to use. One of the problems with Fibonacci's is where do you start and where do you end your drawing? There's the old joke about Elliott waves. If you put 10 Elliott wave practitioners in a room, give them one chart and ask, what wave are we in? They'll give you 20 different answers. It's the same way with Fibonacci's. If you have 5 guys that are fib experts and ask them where to start and stop their fib drawings, you'll probably get 4 or 5 different answers. So that's one of the tough things about using Fibonacci's. Well, I found a rule, and it's nothing. It's not brain surgery, and I honestly don't know where I picked it up, or I would give credit to whoever it was. But basically, there's a rule of 5. 5 is a fib number. Maybe that has something to do with it. But basically, I use a rule of 5 for deciding how I draw my fibs. And we'll do some examples here in a little while, but let me just go through the rule. When I'm creating a bullish fib extension and retracement, I start with the most recent swing high. I work backward in time, looking at all the swing lows. And the first swing low that I find that has no lower low for 5 periods before that candle, that's my starting point for drawing my fibs. You always draw them from lower left to upper right for bullish, and from upper left to lower right for bearish. So I draw my extension, which includes retracements, from that swing low that I identified here up to the original swing high. Pretty straightforward. It's not rocket science. On a bearish fib, it's exactly the opposite. I start with the most recent swing low. I work backward in time, looking at the swing highs, and the first swing high I find that has no higher high 5 periods prior to it, that's where I start, and then I draw backwards down to that first swing low. Okay, that's really the rule of 5. There are some times when you should break a rule, like any rule. The rule of 5 can be broken, basically based on the character of the chart. It's kind of hard to explain, but when there is a major change, you're going from a range-bound, very volatile character chart to a now trending, tight, orderly chart alignment. That would be a time to consider breaking your rule of 5 and look for the full run. When you have a single huge candle, like Rick throws out real long wicks. I remember August 24th. You look at any chart on August 24th, and there are a whole lot of them that have huge lower wicks. Because of the news on that day, we had a huge gap down, and then ran back up into the range. Those kind of days you can throw out a lot of the time, and that will help your layout. And also when the pullback, or if it's a bearish for a pull up, are very, very small. And in other words, when they're flat, that will sometimes throw the rule of 5 out of whack. But in general, it's a very good rule. So what do Fibonacci levels tend to tell us? Well, it is, as I said earlier, they seem to find support levels on retracements. They seem to find resistance levels on extensions. It's nothing, it's magic to me. I honestly don't know how it works out, but I'm sure it comes down to something about human nature, because the market is just another crowd, and the crowds of humans tend to react the same way over and over again to the same stimulus. So it's profit taking and fear and greed, I guess, is somehow related mathematically to those percentages. With that said, let's do a couple examples here. And I'm just going to go down through, I've got 7 examples, and I'll just draw them. They're a mix of bullish and bearish, so you can see it both ways. Let's just look at this position. Here's our pullback, or pull up in this case, and you'll forgive me if I mix my terminology. But I'm going to call this a pullback from the decline. There's the swing low. Now we're going to look at swing highs, and we're looking for one that has no candle with a higher high for 5 periods, and right there it is. So in TC2000, and it's the same pretty much in TOS or whatever you use, you click the tool, you start your drawing, and you draw it down. Draw from that swing high down to that swing low. Now we've got our percentages. And we can see that this pullback was somewhere between 23 and 38 percentiles. And we can see where we're going to run to, and we can look for resistance off here. We don't have any in this case. And that's a good area or a good place where you can use fibs. If there's no prior resistance, how do you know where to set your targets? Well, I can just tell you that I found that, I'm going to put a target right up here about 866. And that's a good place where I would expect resistance. And I'm going to look at more resistance probably at 674. That gives you a pretty good idea. Let's do a bullish one that somebody mentioned in the room today. I think it was Rick. But here's full. We've got this J-hook type pattern, so there's our swing high. Now we're looking at the swing lows. This one, well, there's a lower low 2 bars away. Well, down here it is. We've got, 5 candles where we don't have the lower low. So we're just going to draw from that low up to this high. And again, we can see that is kind of acting as support, that level there. Let's make it bigger so you can see. And here are our extensions up here, 23.6, 38.2. And let's look at how that matches up with where you might draw some support. I would probably draw some support in here based on these touches over here, those highs there. Yeah, that looks like a pretty decent level, and boy, it matches up with 38.2. I would probably also say we've got some congestion there, and we've got a high here. That's probably telling me that someplace in here, wherever you want to draw it, there's a support or there's a resistance level there above us. And, I'll give Fibonacci the benefit of the doubt. We've also got another one up in here that seems to be missed, but that level right there tells me we've got one there, about 1572. And by golly, it matched right up to the fibs. I don't know why, but it seems to be human nature. Let's do another example here, OVAS. This one is bearish. Here we are. There's our swing low. Looking for that swing high where we don't have 5 before. In this case, is this going to be 1, 1, 2, 3? Nope. This one's taken out. How about that one? 1, 2, 3. Nope. This one. This is our candidate there. That's where we're going to draw it. Start there. We draw to that swing low we started with. And now what we can see is we had support, or I'm sorry, we had resistance on the pull up in there, and that kind of matches up to the lows there and the highs here. And we can expect to run down here. Well, look, in the past, they've run down and they found resistance, or they found support. I guess it's resistance to the downfall, but it's support here about $8, and that's where we would expect to find it again. We would expect to find it down here at 38.2. And yeah, that worked out in the past, and I bet it's going to work out again. Someplace right in this area. Using Rick's analogy, we should draw this with a wide crayon. But if I had to pick a number, I'm going to pick 713. And going on down, yeah, that hits about that fib level. And again, we need targets. There are targets. Let's do another one here. I think Flowtech is, it's bearish again. There's our swing low. Nope. Nope. Yep, that's our target right there. No higher high for 5 candles. Draw that down to the original swing low. And again, that level lines up pretty good with these lows in here for where we should have expected resistance. And what does that tell us? Well, our first target's going to be 812. And then down here, 536 is going to be a second target. And if we can break through those supports, we'll get down here to 366. Pretty simple usage, even if the math is somehow... Okay, good. I'm not sure where I was at, but essentially, AMBA was one and requested. In this case, here's your swing low, and 1, 2, 3, 4. No, that's not going to be it. 1, 2, 3, 4. This is one going to be where our starting point is. This is going to be a smaller move. And we would expect that they found support, or I'm sorry, found resistance on the pull-up here at this level. And that's pretty good match for where they've run into resistance above before. We're going to expect support down here, and that matches up real well, multiple locations. And we're going to find that we want to find more support down here. That kind of matches up a few places there, and then on down further, same thing again. These levels are just magic. So in this case, Ann, your numbers are going to be, I guess, 49.45, 46.75, and 45.08. Those are the areas I'm going to be looking for support on the way down. I would not be trading this basic overall trend that this is a downtrending stock. EFTC is just another example here I want to run through quick. We've got the high. We're looking for 5 candles. There we go. And we're going to draw from there up to there. Yeah, that works out. That's going to be an area that's going to be resistance. I guess there was no further resistance, and so this is going to give us targets of 32.22. The 38.2% will be 33.04. And if they can make it through all those, then 34.35 is going to be probably the final target that we're looking at there. The last one that might be of interest to people today is I'll do Garmin. Here's our swing high. Is this swing low? 1, 2, 3, 4, 5. Nope, that's not it. So this is going to be our starting point. We'll just draw from there to there. How does that match up? Well, that's pretty good in terms of where they've found resistance in the past. Where else can we expect to see resistance? Right in this area here. Yeah, that makes sense. So at about 40.17. Up here, again, about 41.22. And on up here, yeah, we found resistance on the way up there, and we found a little support on the way down here at 42.90, or right in that area. Okay, well, I've worked through about 7 examples. I showed you the rule of 5, and I've told you how it helps find the support and resistance that you can draw for yourself, or throwing this up quickly will help you quickly pull your eyes to the levels where you can expect to see it. And yes, it might not be exact, but it's pretty darn close, and I'm going to give it the benefit of the doubt, particularly when we're trying to manage with a wide crayon as opposed to a very fine line pointer. Rule of 5 again. Sure, I can do that, Don. soon as Omnovia catches up here. There we go. Okay, so the rule of 5, basically you're always looking for a starting point. So for a bullish extension, so for our trend is bullish, we start with the most recent swing high. We work backward in time, looking at the swing lows. The first swing low that we find that has no lower low for 5 periods prior to that candle, that's going to be our starting point. And we draw from that point is going to be our lower left. We draw up and to the right to our original starting point, which was that first swing high we found. And that's going to allow us to draw our retracements and extensions. It's just the opposite on bearish. We start with the most recent swing low. We work our way back up in time, looking at the swing highs until we find one swing high that has no higher high for 5 candles before it. And that is going to be our starting point, and we draw from that point down and to the left to our original swing low. Does that make sense, Don? Okay. No, Joe, there's no minimum number of candles because you can have a candle that you know, a 20% day, you can have a bunch of 0.1% days. The number of candles don't really matter. It's the percentage move of the stock that really is going to dictate people's reaction, and I think that's the mechanism behind which the voodoo math that Fibonacci came up with works. So the minimum number of candles between the swings doesn't really matter. It's the you know, just for drawing purposes, I'm looking for 5 periods prior to be my swing points. Do we have any other questions? Okay. If not, I want to thank you for your attention, and I hope you you found this to be useful. And if you have questions, you can ask me in the chat room. We can talk about anything, or we can do it by email. Okay? Thank you so much, and everybody make some profit this afternoon.